investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Market Strategist with Sticky Trades. And before we get to the charts, I'd just like to point something out to those of you who are interested in getting a copy of my 7-point trading checklist. This is something that I use each and every time I look at a chart to forecast the price action. And I follow this particularly on the Wednesday call. Last Wednesday, we analyzed 55 stocks in 60 minutes, and we got a good number of star favorites out of that one. Again, using the 7-point trading checklist has helped a lot of people. And if that's something you're interested in, just go to stickytrades.com. That's our website right there. And look at the bottom right-hand corner. We have an automated online operator that will help you right there. All you have to do is say, please send me a copy of the 7-point trading checklist, and we will get that out to you. Free, absolutely free. No obligations, nothing like that. So using this 7-point trading checklist, we're going to analyze the type of candle. We're going to look at volume. We're going to see how far away the prices are moving away from that 20-period moving average. We're going to look at gaps, stochastics, you name it. And then we're going to weigh the evidence to see whether or not those are bullish or bearish. Now, my strategy for our members especially is a swing trading strategy where we look at charts, we play option spreads most of the time. I also trade silver using this particular strategy. Some of you who are following me on Twitter know that already. And so if you look at DIA, you can see that my upside target has not yet been hit. I think we will do that early on, possibly Monday or Tuesday. That upside target for the diamonds is 364.46. And then I believe we're going to see a continued drop in this volume as the oscillators start to pivot lower. So we still have a little bit more work to do on the upside. So we'll keep track of that, and I'll report back on Wednesday during the midweek report. Then once we hit that upside target, I do believe we're going to start to pivot lower to 355.58. So nothing has really changed. We're kind of caught between the upside gap and the downside gap. Nothing we could do except wait and see what happens next week. Now, looking at IWM, we're pretty much in the same position where we started off going to the downside after hitting the upside target right here. You can see my upside target was hit at 185.83. We still want to see a continued drop in volume. You remember from Friday, I said that we would most likely see a drop in volume. Look at that. That's pretty amazing. We came very close to pinning that volume drop right there. And so Monday and Tuesday, because the CCI has pivoted up along with the stochastic, I think IWM could see a little bit of an uptick before we hit this downside. So I'm going to go up on this one, and then I'm going to draw a horizontal line right here, which will be replaced with a green dotted line to the downside. So Monday and Tuesday, we could see upside to 188.54, and then the drop in volume, I'll even forecast that with a horizontal line right there into Tuesday, and then the trek back down to this downside target. So we have some upside momentum coming into the close on this Friday, which could continue higher on IWM. You see that increase in volume. Remember that trading checklist, very important. We have an increase in volume on the way up, and that is more bullish than bearish. So we're just weighing the evidence there and putting our targets out to coincide with that signal. So that's IWM. Now, if we look at the QQQ, we did hit the downside target that I had in place. I did not have an upside target for the Qs. I just had a downside target. And we hit that on Monday right there at 383.27. Now look at the Qs. We have a green candle. We have the oscillators going up. However, we have a drop in volume. So if you look at the trading checklist, we have a green candle, which is more bullish, but we have a drop in volume, which is bearish. It's right on the moving average, so we can't really see anything happening there except possibly a bounce. So it's going to be right in the middle, possibly a bounce off of that 20-period moving average. Not positive, not negative. It's just an observation of support. Gaps below the market are bearish. The stochastic and the CCI are heading up, and we are bouncing off the role reversal, which is the 20-period moving average. So if you weigh the evidence right there, you could see that we have more bullish signals than we have bearish signals. So I'm going to go up on the Qs next week. For that reason is that we have more evidence to the buy side. So as I condense the price action here, let me just give you a target, draw a target line just like that. Upside target of 395.52. And then again, we'll have to see whether or not the volume drops. And then maybe Wednesday we'll start looking more downside. But the volume is not higher than what it was yesterday. We could see this resistance area hold, maybe trade above it and then close below it. We'll have to see. But again, upside target on the Qs is 395.52. Now let's go to SPY. I will be talking about crude futures, so stand by for that at the very end. Now here we have, again, we just hit that upside target that I set from last week. And we hit that with just about 20 minutes to go before the close. You can see here that the high was hit right there. See this high right there at 3:39 p.m. Eastern time. And then we sold off a little bit off of the highs. So we did hit that upside target. Now we're going to have to keep an eye on that drop in volume. If we get a drop in volume on Monday and Tuesday, it doesn't even have to be a big drop, just a slight drop, then we will start to move lower and pivot towards my downside target of 450.18. Now, a lot of our option traders out there who are watching YouTube are finding this very valuable because option traders could trade up, down, and sideways and making money by trading spreads or buying puts on the way down. And that's what we do at Sticky Trades. We put out trade publications to help our members. And many times we are taking long positions, even though I'm forecasting lower prices for the long term on the major market indices. We do take long positions, especially right now. We have long positions in oil. I can't give you all the details, but we have a long position in CVX. We have a long position in OIH. So I'll be analyzing the oils for those who are interested. We did have a request last week to do that on the weekly market report, so stand by for that. So again, now that the upside target is hit, my downside target is 450.18, and that of course is going to be contingent upon that drop in volume. Now for the VIX, very interesting. We set a new low. Look at that. The VIX is moving lower. The low for today is $12.35. We have not seen the VIX that low since January of 2018. Almost 6 years ago, we hit that low on the VIX. Now, notice what's happening as I zoom into the VIX here. Even though we have a lower low, we have higher lows on the CCI and higher lows on the stochastic. So the VIX is most likely going to start moving up. I would say probably by Wednesday we'll get a pivot. I'm not going to do 2-day or 3-day forecasts on the VIX because it's an oscillating index. It's not a stock that trends. But I am keeping this upside target in place for the VIX at $18.11. So I'll draw a horizontal line there as well, and we'll keep that, and I'll adjust to make sure that that $18.11 is represented in that green horizontal line as I change that to green. Now, like I said, CL, forward/CL is what I'm looking at here. This is the light sweet crude oil. This is the futures. Notice what we have right here. We have a beautiful bounce pivot off of that support level. Could have made that a little bit straighter. In fact, I will. I like to keep it as straight as possible. So let's do it this way. Let me just put a horizontal line right there at this support level. Bounce, bounce, bounce. You can see that we are pivoting higher on crude. And right now, if you look at the oscillators down below, taking that trading checklist out, you can see that we do have a pivot, a strong pivot on the stochastic. We have a pivot on the CCI with a positive divergence to boot. You see this? We have a higher low after lower lows, much lower lows on price. So that is very bullish. We have a wide divergence from that moving average. That is bullish. Again, take out your trading checklist and check it off, and you can see that there are no bearish signals at all showing up on crude. Now, those of you who have been following me along here on my webinars especially, you know that long-term I have a bullish outlook on crude and the energy sector. So I thought I'd throw that out there for all of you. If I was going to put a target on this one, I would give it a couple of weeks and give it a target up here at around 72.83, which will bring that closer to that moving average. Now let's go to some of the economic data that came out this week. This was a big miss on job openings. I don't particularly pay too much attention to the unemployment rate. That is one of the most manipulated numbers that are out there. We talked about that last night on a call that we had with our equity traders. But this was not just a little bit of a miss. This was a big miss. You see this line right here? That was the forecast, and this is where it came in. Now, this chart came from the Forex Factory. I've been mentioning that quite a bit. That's forexfactory.com. You can go look at the numbers that came out, and they pull up this chart. This is the JOLTS, this is job openings, and you have to see that this is not a good thing here at all for the economy, no matter what you're saying. Now, for those who listened to me talk about contrarian theory last night, contrarians are not those who just always go opposite from the trend. They recognize the trend, and then they hunt for news that could possibly sway the popular opinion that's behind that particular trend. So this is the kind of information that I dig for, because eventually this is going to hit the markets and push prices lower eventually. We're in the month of December. We could see a little bit more of a Santa Claus rally in the last week of this month and possibly the first 2 trading days of next month. But after that, I think after the year-end rally, we could see some profit taking to push prices lower. Now, this is another reason why I believe we're going to see higher oil prices. The U.S. is now buying back into their inventory for the strategic petroleum reserves, and this will most likely cause supplies to drift lower and cause demand to come in to push oil. So this is more of a fundamental outlook, more so than the technicals. And as I just showed you with the chart of crude, the technicals are supporting the fundamentals for a higher demand as supply diminishes. Now, this week, Christopher Wray, who's the FBI director, made some very strong comments and used some pretty big words. Never, that's a big one. All, he used all several times, where I have never seen a time where all of the threats, or so many of the threats, all elevated, all exactly at the same time. Now, I've been talking about our national security at the southern border. I would agree that the threats are increasing while the border is wide open, especially in Arizona. You can see here, if you're watching any of this video, I believe that terrorists are literally walking right over the border and not even being stopped. They're being waved in. And so if you know anything about Hamas and the terrorists that absolutely hate the U.S., I just think it's a matter of time before they launch something. I could not tell you what that might be. I'm going to leave it at that because I talked more about this in detail last night. I don't want to be bumped from YouTube. If I go too far down this road, they will most likely start censoring me here, and I'd rather not have that happen. You could draw your own conclusions for digging for the news here, but I would say search for border crossings, search for FBI comments, search for alerts that might be coming out from our government and Homeland Security. And as we get closer and closer to the holidays here, I would say that the warning flags are going to continue to wave as we get closer to year end. All right, so the commercial mortgage distress rises here in November. This is something that I've been talking about. As we come into January, you're going to see that the COLA numbers, which is the cost of living allowances, are going to automatically raise rents, especially for commercial real estate. And I think that's going to put more stress on companies. So this could lead to more bankruptcies down the road, as the cost of carrying warehouses and real estate continues to eat into the profits of a lot of these corporations. So stay tuned for that one. And then we have, of course, The trucking sector, we're seeing a lot of layoffs here. I do not get paid to promote anyone, but I do follow Game of Trades on X, and I do follow them on YouTube. And while we don't always agree in our technical analysis, most of the time we are agreeing and aligning with our outlook. And you can see here that if you go back to 1990, whenever we've had these pivots starting to form, you'll notice that these pivots in the number of employees that are being laid off, it starts to drop just before we have recessions. And so I think we're already in a recession. They're not going to want to talk about that in a presidential election year, of course. So there's a lot of manipulation with the numbers, and you'll see it's not very hard to find this. You'll see that the numbers are starting to pivot right down the road. Now, this one came out just yesterday, where Reuters reported U.S. household wealth is falling again in the third quarter. This was the third quarter now, and we'll have to see what happens in the fourth quarter. The household wealth will gain a little bit of strength if we end the fourth quarter in the markets stronger than we did in the third quarter, but I still don't think that's going to make a big difference overall in household wealth. So keep an eye on that one through Reuters. You could also find this through the Federal Reserve in St. Louis. They put out reports on this, and you could pull up your own graphs and add your own layers and secondary charts over the data as well. That's a fun site to go to. That's the St. Louis Federal Reserve. All right, now this one is another big one. For those of you who weren't trading back in 2007, that's when I went extremely bullish, and it was because of the comments that Barack Obama made upon taking office. He said at that time, I would not bet against the stock market at these levels. And I went very bullish back then. And if you go back and understand the reasons why we had one of the greatest, if not the greatest bull market in history that lasted for 14 years, it was because of quantitative easing. QE1, QE2, 3, 4, 5. And now what's happening is we have quantitative tightening. Now, this is when the Fed starts pulling money out of the system. Quantitative easing is when they're pumping money in to stimulate growth. Quantitative tightening is the exact opposite. If you go to Wikipedia, they have a good explanation of what QT, or quantitative tightening, is all about. You can read along here at the bullet points, but I'm going to draw your attention to bullet point number 4 right there. The risks of quantitative tightening is that it has the potential to destabilize financial markets, and in turn, that could trigger a global economic crisis. Now, when you couple that with what's going on in China, they're having their own economic challenges, that could cause a ripple effect to eventually push the markets down. I think between the threat of an attack coming over the border combined with quantitative tightening, again, I've said this over and over again, and I'm not moving from this, what will eventually push the markets lower in the long term, it could be shocking. And that's exactly what I've been telling people all along. I think it's going to shock the markets. Therefore, if you have any long positions whatsoever, I would keep a good risk management plan in place. And you go ahead and continue to manage risk, follow the charts, follow along with Sticky Trades. And remember, like, share, subscribe. You're doing us all a great favor. And if you want that trading checklist, again, just go to stickytrades.com. Tell our online operator you would like a copy, and we'll get that right out to you. So have a great weekend. Happy Hanukkah for those who are celebrating Hanukkah. First day, start lighting those candles. And then we have Christmas after that. So wish you a very merry season all around. And stay tuned. We'll talk to you next time. Bye-bye.